that are likely to open up in the red.
All right, Arvind Sanger is with us. He's managing partner at Geosphere Capital Management. He's been pretty prescient about market moves, large moves, and we've happened to get him at critical points, good points to get his views from as well. Arvind, great to have you with us here back on the program. Thanks very much. So we get this big jobs number for September out of the U.S. today. How crucial is that? And are we still in a good as bad kind of an environment from an equities perspective?
Yeah, unfortunately, we are in that environment, and I guess jobs number is important, but I think CPI data next week is even more important. And the reality is, I think the market is kind of hoping that because of the dovish move by the Australian Central Bank a few days ago, and by the dovish kind of a panic move by the BOE, a week or 10 days ago, that therefore the Fed will also follow. And I think that's wishful thinking, right? That somehow, if some other central banks are taking a slightly less hawkish stance, that the Fed will naturally follow. I don't think that's the sequence in which it works. We are going to need to see some meaningful downside surprises on the job fronts, on the inflation front, for the Fed to really start showing any signs of easing. Otherwise, I think 100 basis points to 125 basis points is our base case of what happens between now and year end. So you can never say never, and the data might surprise us. But I think the one thing that you've just talked about, which I think is very important, is I think oil, the downside to oil prices has been truncated by the OPEC put, and there is real risk here that if the Saudis the Saudis will do what they will do, but if the Russians decide to, in addition, take 1 million barrels of the market, there's been some rumors in oil markets that they might add on or pile on top of this, with the U.S. Having drawn down its strategic petroleum reserve just to help out the Democrats in the election. There is no, offset to that. And therefore, there is some real risk, in our opinion, that if after the National People's Congress, China starts to abate its zero COVID, then you could get the perfect storm of a sharp rally in oil prices, and that will offset any other benign data because that'll become the next new headwind. So I think there's enough uncertainty out there that I don't think the markets are going to run away anywhere here right now.
Okay, so that's quite a cautious view that you've woken up with this morning, or rather we've woken up to this morning. Arvind, good morning. So what do you do with a market like India now? Do you just stay put, raise cash levels, stay on the sidelines because you are cautious? Or do you think that this is a good time to be buying the dip as well?
Well, look, in terms of U.S. dollar terms, and that's, my perspective, obviously not a local investor's perspective. In U.S. dollar terms, the market has rallied about 7.5% off its lows. So it's had a nice move, but it's not a huge move. I think it's range bound, in my opinion, between the dollar weakness and the market volatility. I would say that we are, trying to pick individual names when they get interesting, because I do believe that India is one of the better placed economies in the world, with the one Achilles heel being current account deficit going out of comfort range because of high oil prices and high import pressures, and therefore that's the one negative. But notwithstanding that, from a domestic story, from a lot of drivers and from some of the beneficiaries of some of the turmoil in other emerging markets, particularly China, India is one of the relative winners. So I would say, as we've said all along, patiently buying, not using all the bullets too quickly, because I think the West is quite likely headed to a recession in 23. And therefore, not to be too early on the India bull story, but not get bared up. This is not, India is going to be, in my opinion, one of the better economic stories in 23. So other markets that are more oversold may rebound better. But I think India, if I take a 2 to 3 year view, has one of the best economic stories in global developed and emerging markets. Therefore, I think with a patient mindset, there are going to be good opportunities in India.
Hi, Arvind. I'm sensing a bit of caution in your tone as well, though you're reasonably optimistic on the Indian markets in a little longer time frame. My question to you, Arvind, is when do you get a little bit cautious? Now, we've been talking about decoupling of the Indian markets with the globe. The problem is the way the rupee is moving. We're closer to around 82. And as you mentioned, crude oil prices could spike up as well. What are the levels where you get uncomfortable on the Indian markets on both these two?
Well, I mean, I think if the rupee, I mean, if the crude oil price is headed back above 100 and headed towards 110, and there are a few factors that are laid out. China zero COVID going away, which is again unpredictable, but it's possible that that could happen. Russia doing something to curtail its output just to affect global markets because they clearly want to try to hurt the West. And U.S. Strategic Petroleum Reserve release ends in the next month or so because already at multi-decade low levels. Those are all factors that we have to keep an eye on. So to me, the real joker in the pack is not, I think the CPI numbers will abate, but I don't know if there'll be a positive or negative surprise. But the real joker that I really worry about there being upside surprises as to oil prices, and that could be for India a bit of a headwind. So therefore, my caution is coming out of that, and I'm not seeing that as a killer for the Indian economy, but it's certainly a headwind for the Indian rupee and for Indian inflation, because imported inflation, and therefore it starts to, that's the negative feedback loop that the world is worried about, and India should worry about, which is in case inflation comes back. So that's why I'm cautious, and I've been cautious all year.
I think
to be patient, to be greedy.
Be patient, not greedy. Don't completely deploy everything. Have some money in the hands and sit on that for as these things play out. You'll get better prices. Arvind, IT services is an extremely profitable area in terms of just sheer growth that companies have shown, etc. But the valuations got bid sky high post-COVID. And now they've corrected. It's one of the largest market groupings, which is still significantly off. This week, the IT services space is up 3%, 3.5%. The Indian IT services space. It's directly correlated to the fortunes of the U.S. economy. So it doesn't necessarily have to bottom out exactly when the economy starts to do better there. There is always lead and lag. What's your sense, Arvind? IT services as a space here in India?
Well, look, the U.S. markets have rebounded. The dollar has weakened, and there's a lot of factors that have driven. There are a lot of macro factors at play. My view is that IT services is obviously a bit of a global growth play, right, from a demand standpoint, and therefore they have sold off. I think they have sold off well in advance. They will bottom well before the Western economies bottom. Calling the bottom in any of these sectors is very hard, but I think when valuations get to where we can make a case that, from a long-term standpoint, a lot of bad news is being discounted. And I think IT services is probably closer to that than any other major sectors in India, even though it's, Western exposed from a growth standpoint, but it also benefits from a weaker rupee. So in my opinion, IT services has started to look interesting to us, not just this week, but in the last couple of weeks and in the coming weeks, as a bottom fishing sector because of their rupee resilience. I mean, rupee benefit from weak rupee, and because they've discounted a lot of the bad news in terms of slowdown coming out of the West.
Okay, that's interesting. So you're looking at some of these IT names. Just a quick comment on FMCG because it's very topical now. Almost all companies, Dabur, Marico, Godrej Consumer, have indicated a slowdown in growth and margin pressures. Would you buy the dip there or would you be cautious?
Well, given that they are showing margin slowdown when oil was coming down, I would worry about their margin pressures if oil goes up. So I would stay on the sidelines right now because I'm concerned about oil prices going up.
Okay, all right. Arvind, thanks so much for stopping by and giving us your view. You're sounding a little bit cautious out there, but you believe India's story is good for the longer term. However, crude oil prices, that's a joker in the pack. If that moves to around $100, $110 per barrel, then Arvind says that it'll be time to get a little bit cautious on the Indian market. So a couple of domestic stories still looking up. Well, we'll slip into a short break. You come back, we'll get to the top list of stocks that we're tracking for you.